I will switch off my video soon because of the bandwidth and to save some bandwidth. And good evening, everyone. About to start within 20 seconds, more or less. Of course, this session will be recorded, and you can also take a look afterwards as well. Okay, it's 8 o'clock, and very warm welcome, everyone, attendees, and also, of course, Harry Clip and the best horse of today, of the stable. The best presenter today is Julian Leroy, and together we are going to present Vontobel's best turbos, and Harry and me will do some, give the last half hour some inside information or insight and also insights about how you can play the market. We will offer you two possible trades, one long and one short. And of course, Harry says, feel free to ask questions. Julian is responsible for distribution of products Vontobel. And today we have the honor to have him here at our presentation, our webinar. This is the first of a series the coming month. And Julian, bonsoir, very warm welcome. And could you please introduce yourself to the audience?
Hello, so I'm Julien Leroy. I'm in charge of the distribution of exchange-traded products for Vontobel in the Netherlands and also in France. So that's why I'm here tonight, this evening. It's to present you some of the Vontobel products, and to be more precise, I'm going to present you the best turbos, which is a type of turbo that Vontobel is issuing in the Netherlands. So I propose we can now start with the presentation itself. To make it easy, I would close the camera so that you can focus on the presentation itself. So here's the plan of the presentation. We'll start with a quick word about Vontobel, and then we'll see the characteristics of the products, and we'll also see the risk and benefits of best turbos and some details about what is called knocker hours, and also we'll talk a little bit about the Vontobel website. So first, a little word about Vontobel. So Vontobel is a Swiss bank, which is almost a century old, and we have our headquarters in Zurich, in Switzerland. But we are not only doing business in Switzerland, but in the entire European Union, and we are present in the Netherlands since 2017 for exchange-traded products. We are also present in other European countries such as Germany, France, Italy, and the Nordics, and of course also Switzerland. We are not only doing exchange-traded products, but also wealth management or asset management, and we have offices in other countries, in London, in Hong Kong, or in New York, for example. So now let's continue with the presentation of the best turbos itself, and you will see that there is a reason why they're being called best, and that's what we're going to see here. So first of all, Vontobel is issuing long and short best turbos on a wide range of underlyings. So you can find products on stocks, on indices, on currencies, on oil, and other commodities also. As a quick reminder, a product is said to be long if its value increases when the value of the underlying increases, and a product is said to be short when its value increases when the value of the underlying asset decreases. So now to the product itself. So best is for barrier equal to strike. So as the name indicates, the product is going to have a barrier and a strike. So what is a barrier? It's a certain level, it's a deactivation level for the product. And when the price of the underlying reaches this level, the product ceases to exist. So this barrier is really fundamental characteristic of best turbos, and we'll then later see how the strike of the product is being used. Also, another important characteristic of this type of product is it does not have a maturity date. It is called an open-end product, so technically it can exist for an indefinite period of time as long as the barrier is not reached. And also another characteristic of the product is that the financing cost of the product are being passed on the product through the adjustment of the strike every day. So this means that the financing costs are not being paid directly by the person purchasing the product to the issuer, but are passed on through the adjustment of the strike. And we're going to talk about this a little bit later, so it's going to be clearer for you. Another main feature of best turbos is that these products are leveraged products. So this means that if the underlying price moved in the good direction for the product, the return of the product is going to be higher than the return of the underlying itself. So investing in a turbo will in this case be more interesting than investing directly in a long or short position in the underlying. And of course, it works in both ways. So it means that if the movement in the underlying price are not favorable for the product, then the return will be worse than the one of a direct investment in the underlying. And the last main characteristic of best turbos is that it's a linear product. So this means that when the price of the underlying increases by 1, the value of the turbo increases by 1 for a long product, and for a short product, it's going to increase by 1 when the price of the underlying decreases by 1. Here on the slide, I wrote 1 multiplied by the parity divided by the exchange rate. This simply means that if the underlying is not quoting in euros, you have to take into account this exchange rate. For example, if you have an underlying quoting in US dollar, for example, a product on Amazon, then you would have to convert this US dollar amount to euros. That's why you have the exchange rate. And here the exchange rate is always €1 against X units of foreign currency. The parity, it's just the number of units of underlying you're going to have. It's going to be a little bit clearer in the next slides. We're going to talk a little bit more about this. So here you have an example of how leverage works. You have this relation between the leverage of the product and the return of the underlying, which gives you an approximation of the return of the product. So it's just the return of the underlying over the considered period multiplied by the leverage of the product, the leverage being the one when you bought the product. So here on these tables, you see the impact of leverage on the return of the product. First, for 1% return of the underlying. So the higher the leverage, the higher the return. And in the second table, it's the unfavorable case if there is a negative underlying return. So the higher the leverage, the worse the performance is going to be. And in some case, the barrier will be reached and the product will be deactivated. So here you have this mathematic formulas. May seem a little bit complicated, but it's in the end not that complicated. It simply states that for a long product, the value of an open-end turbo, it's going to be the difference between the current price of the underlying minus the strike of the product. And because you have to take into account the number of units of underlying you are using for a product, you have to multiply it by the parity. And again, if it's quoting in a foreign currency, you have to take into account the exchange rate. So you have this first part of the formula, and then you have the gap risk premium, and we'll see later what it is. So for example, the parity, it is not necessarily 1. If you take a product on Amazon, Amazon is currently quoting at more than $3,600. So if you take a product with a strike of $3,000, you're going to have a product price which is going to be about 600 euros. And this is maybe a little bit too high for retail investors. So we're going to say we are not taking one share of Amazon as underlying, but 0.01, for example. And then you're going to have a product price which is going to be about 6 euros. So it's more affordable for retail customers. So that's why it's not necessarily 1. And for the short product, it's going to be the difference between the strike and the price of the underlying. The rest remains the same. So to sum up this part, for a long product, if the value of the underlying increases, the price of the product increases. And for a short product, if the price of the underlying decreases, the price of the product is going to increase. And if it's an underlying quoting in a foreign currency, when the exchange rate increases, so the exchange rate being €1 against X units of foreign currency, the value of the product is going to decrease. So here we're going to talk a little bit about replication. So first, what is replication? It's creating a portfolio which is going to have the same value as a derivative. So here, the target is to create a portfolio using simple financial instruments such as a stock and borrowing money to recreate a best turbo. So there are 2 reasons why replication is interesting. One of them is that it shows how the product is working. So it helps to understand how the product works. And the second reason is it's actually what banks are going to do when they are selling a product. So here, for the replication, we're going to consider the following case. We are interested in replicating a turbo on a share X, which is currently quoting at 50 euros. So what we can do to buy this share, we have different possibilities. We can say we bring 50 euros and we buy the share for 50 euros. But another possibility is to say, well, we're going to borrow a part of these 50 euros and we're just going to bring the rest to buy the share. So here, let's say we borrow 40 euros. So we'll have to bring only 10 euros to buy the share. But by borrowing these 40 euros, you're going to have financing costs. And let's say here that the financing cost is 2% annualized. So we'll have to pay interests due to this loan. So what we're going to do is with the 40 plus 10, we have the 50 and we're going to buy the share. And to make sure that we are able to reimburse the 40 euros plus the interest, we're going to say, well, if the price of the share reaches 40 plus the interest here, in this example, 0.02, then we're going to sell the share and keep the money. And at the end of the day, we're going to pay it back to the person we borrowed the money from. So this is what we have at the opening of the position. We have the share is quoting at 50, and on the other side, we have a 40 euro loan plus the 10 euros capital. So what can happen at the end of the day? It's the stock price increased to 55. So now we are in the following situation. We still have to pay back the 40 plus the interest. So we have to pay back 40.002. And what we have on the other hand is the stock, which is now quoting 55. So what we have as capital in the end, it's the difference. So we're going to have 14.998. So you can see what we have here is very similar to the formula I just showed you about the price of the products. So you have the difference between the value of the underlying asset minus 40 plus the financing cost, which is going to be the strike of the product because it's the level at which we're going to sell the share. If the price of the share reaches this level. So now it's an iterative process for the replication of the product. So let's say that after this day, we decide to keep the position. Then, because we don't want to have to add any new fresh capital to this position, we'll have to find a way to get money to pay back the loan, the last loan, plus the interest related to it. What we're going to do, we're going to borrow this new amount. So we're going to borrow here the 40.002. And this is again going to generate new interest, which will have to be paid at the end of the day. So again, we set the same thing. We put a barrier which is going to be equal to the new loan plus the interest. So here in this example, we're going to have a new barrier at 40.004. And again, if the stock price reaches this level, then we're going to sell the share, get the 40.004, and at the end of the day, we can pay back the loan. So as I said, it's an iterative process. So now let's assume we are after n days, and we had the total of 5 euros of financing costs. So the situation may be as following. In the first one, we assume that the price of the underlying is now 70. So what we're going to have is we have to pay back the initial loan plus all the financing costs. So it's going to be the red plus the yellow part on this graph. And we're going to keep the difference to the black part. So in the first case, it's a positive case. You're going to make a win compared to your initial investment. On the other hand, let's assume that the stock stayed at 50 euros or went back to 50 euros. Then what we're going to have, you have all the financing costs, you have the initial loan, which you have to pay back. So on the other hand, the difference is just going to be 5. So you're going to be losing 5 euros capital, and you're just going to have 5 in the end. And again, if the barrier is reached at some point, you close the position and you lose the entire capital invested. So that was for the replication part of the product. So here there is a slide about the financing cost of the product. So you can see how it is passed on the strike. So how the strike is going to move. So the new strike is going to be the previous strike plus the financing cost for a long one. And for a short one, it's a little bit different. We can also do a replication for a short position. It was only for a long one. But it's a little bit more complicated, and we have a limited time, so we're not going to talk about it this evening. So here you have the long case. So what you see is every day the strike is going to increase a little bit. But as you see, the amounts are quite small. Here, the interest rate used, it's 2% interest rates. So it's a realistic level. For European share or European index, it's realistic. If you take a product on a US quoting stock, it's going to be a little bit higher, but still per day, it's not going to be extremely high. So what you see is that the strike is progressively increasing. This means that if the underlying is still quoting at the same level, if it's not moving at all, then every day you're going to lose money due to the financing costs. And here you have the formula for the financing costs, how it's computed. So here we have a last slide where we talk about if it's a good idea or not to do it on your own, because I gave you the recipe for the replication of a turbo. So, well, it's not necessarily a good idea for a retail investor to do it on your own, because you're going to have several problems. The first problem you're going to face if you try to do this at home is you may not be able to find someone who is going to lend you the money. That's going to be the first problem. Or if you find someone who is going to accept to lend you the money for such an investment, they're going to make you pay very high interest rates. So the trade may not be interesting at all due to very high financing costs. So this is really a problem which a bank does not have, because banks have better access to the financial markets than retail investors. The second problem is the market access. Retail investors, again, have not have a market access which is not as good as the one of banks, and this can lead to several problems. One of them is that if the barrier is being reached, they may not be able to sell the stock to at the price of the barrier. So maybe they're going to sell the share when it's below the barrier. In our example, the first barrier was at 40. Maybe the stock is going to reach 40, but the person is only going to be able to sell the share at 35. So they're going to take a 5 euro loss in this case. I told you before that the price of an open-end turbo, in the price, there is a gap risk premium. And this is also a problem that banks are facing. Maybe will not be able to sell the underlying directly at the price at which the barrier is set. So we are charging a fixed gap premium risk, which depends, the level of the gap premium risk depends on the underlying. If you take very liquid underlyings such as the Dutch index AEX or the German DAX or US indices, it's not going to be a problem. If you take less liquid underlyings, the gap risk may be a little bit higher then. And the last point is, if you want to replicate a position on an underlying which is not quoting in euros but in USD, for example, then you're going to have the problem with the exchange rate. Again, for retail investor, it may be very costly. So this may reduce the return of the position in the end. So with the turbos, if you buy a best turbo, you're not going to have all these problems because they're going to be the problem of the bank. And I told you that replication is not only interesting because it explains how the product is working, but it's also interesting because it's exactly what the bank is doing when you're buying a best turbo. So this means that when you're buying a turbo from a bank, from an issuer, the bank enters in this replication position, so they're going to be able to pay you what they owe you in the end. So when you buy the product, you're not betting against the bank. So it means that if you make a win with your best turbo, this is not going to be a loss for the bank. And on the other hand, if you make a loss with your best turbo, then it's not going to be a win for the bank. So it avoids conflicts of interest. So here we have first example of how a best turbo is going to work. So here I computed the barrier using a 25% interest rate. This is not realistic at all. For European underlying is going to be the interest rate used is going to be between 1% and 3%. So this is not realistic, but it has been done this way so that you can clearly see how the barrier is moving on the graph. So here you can see in yellow, the barrier is progressively increasing. If you compute this with a 2% interest rate, you're just going to be seeing a straight line. So that's why the 25%. So here on this graph, you see in blue, there is our share X, initially quoting at 50 euros. And here you can see that the price of this share is always above the barrier. So the best turbo is going to continue its existence. And for example, we say that the investor buys the product when the share is quoting at 50. It's on the left of the graph, and then sell it when we are on the right of the graph. So here the stock price increased and the investor makes a nice profit in the end, because he bought initially the product for 10 and he's selling it for more than 40. So that's a favorable case for best turbos. And now we're going to see that if the barrier is reached, then it's not that nice. So here it's the unfavorable case where the barrier is reached. So again, the stock price is in blue and the barrier in yellow, and in red you have the price of the best turbo. It's a long product here. So what you can see is that the blue line reaches the barrier, the yellow line. So this leads to the deactivation of the product. So the product expires without value. So there is a total loss of capital for the person who bought this product. And no matter what happens after the barrier has been reached, the product remains deactivated. So here, for example, you can see after some time, the price of the underlying in blue increases and it goes back again above the barrier. But it doesn't matter since the product has been deactivated. So it just has to be like half a second that the price reaches the barrier, and then the product is going to be deactivated. So now we're going to talk a little bit about the risks and benefits of best turbos, starting with the risks, because it's important for retail investors and investors in general to be aware of the risks of the product they are going to invest in. So one of the first risk factors of best turbos is the leverage of the product, because as we already mentioned, if the price of the underlying is going to move in the wrong direction for the product, you're going to lose a significant amount of your capital due to this leverage effect. The second point is that there is a possibility of losing its entire capital. This is what is going to happen if the barrier is reached. The capital is then losing the entire initially invested capital. The third point is less likely to happen than the first two one. It's the risk of default of the issuer. It's if the issuer of the product goes bankrupt, you may lose your entire capital. But this is clearly less likely to happen than the first two one. For now, no issuer of exchange traded product has been default in Europe. So this is clearly less likely to happen. And the third one is the risk of termination of the product. As already mentioned, these are open-end products, so they don't have a maturity. And that's why the issuer has the right under some specific condition to terminate the product. These specific conditions are, for example, if the underlying is no longer quoting, which happened, for example, with Wirecard in Germany last year. This company went bankrupt and was no longer quoted, so we were not able to quote the product anymore, and we had to terminate all the product, which means that the investor got the final value of the product, and that's it. Now, the benefits, because there are not only risks, but also benefits. First one is it's going to enable investors to access a large range of underlyings. So you can invest in turbos on stocks, on indices, on commodities, on currencies, on oil. So you really have a wide range of products. You also have interest rates, for example. And some of these underlying are not accessible for retail investors normally, like commodities or even indices. It's complicated because you will have to buy every component of the index. So you have to use somehow derivatives or more complex financial product than a direct investment in the underlying itself. The second point is it allows you to enter short positions. And entering short positions is extremely difficult for retail investors. So a simple way to enter short positions is to buy a turbo short, and it's can work quite fine. If the price of the underlying decreases, then you're going to have a nice return potentially. The third point was also in the risks, but it's normal. It's the leverage. As mentioned, it works in both ways. So if the price of the underlying moves in the right direction for the product, you're going to have interesting wins. And the last 2 points are that with a turbo, your maximal losses are going to be limited to the initially invested capital. So this is interesting for retail investors because you buy the product, you know what you're going to lose in the worst case scenario. For example, you put 500 euros in the best turbo, the barrier is reached, you lose 500 euros, which is not nice, but at least you know you're not going to lose more than 500 euros. With other products like CFDs, you may lose more than the initially invested capital. And the last point is, once you enter the product, you don't have to add any capital to the position to maintain it open. So you just pay the price of the product to the issuer plus the broker fees, and that's all what you're going to pay to enter the position and to keep the position. So now a quick word about the knockout hours. The products, they can only be deactivated when the underlying is quoting. So for European stocks, it's going to be between 9 and 5:30. Same for European indices and stocks. For US stocks and indices, it's going to be from 3:30 p.m. to 10 p.m. And then you have more specific knockout times for commodities and also for metals. And I forgot to mention it, for currencies, it's from Monday to Friday. And since the Forex is open all the week, it can happen at whatever the time during the day. So here, just a quick word about the Vontobel website. So we have a website where you can find all of our products. And you will find all the characteristics, all the documents related to this product. And also you will find our contact. So if you have any question, do not hesitate to contact us. You can write us an email or call us. So that's it for my part. Now Jan can continue.
Take a look. Hello. Am I visible? Let's take a look. Hello. Do you hear me? Harry, do you hear me as well? Yes. I don't see the attendees actually. Julian, are you there? That's strange that I cannot find it. Let's take a look because there's something going on with the settings.
I see that people are hearing us in the chat.
Oh, sorry. Yes, true. The thing is that I was a little panicked because the sorry, the screen moved to minimize, and so I could not find myself. Thank you very much for your clear presentation, actually. And I've got a question that also for other people, who is already trading with turbos in general, or who has experience with leveraged products. Of course, we have OptieAcademy. We are traders in options. That's for sure. And the thing is that what we are doing is trading options, but what we are always looking for are opportunities, opportunities to earn money, and to opportunities to how to buy and sell, or to participate in the market, and how to gain from our insights. And that is very important because there are many ways you can buy and sell underlyings. If you want to buy a share, like Tesla, for instance, it's very costful to buy shares. But you can also trade in options, what we used to do in the past, also now still. But there is another thing is that with options, you have also limited risk when you buy options, but you're fighting against time. And with turbos or best turbos, you don't have this time issue. And I see that Christoph says so far only options, not experience with turbos. And only Ruud says only I've experienced with turbos at Bink. Okay, thank you very much for your reply, of course. And everyone who is interested in to receive the crypto, sorry, the slip of the tongue, the turbo trade of the week. And tomorrow we are going to issue the first trade of the week. And it will be a very big discussion. Will we go long or short? That we have to find. I have to fight with Harry for that. But a very short introduction. Thank you very much, of course, Leroy, for your excellent presentation. And OptieAcademy, we are guys straight from the options floor. And as you can see, Harry and me it's a little bit broad, I think, big and but in the early days we were trading with jackets on the option exchange. This was in the mid 90s, 80s and 90s, and we were just straight from the floor, and we were dropped on the floor, took our exams with option and futures, and we were able to trade, but we had to find out ourselves. Later on, we moved on to screen trading, of course, and here you see some screens. This is the desk of Harry with 48 screens, but you don't need so many screens, of course. And so the program of our presentation here of Harry and mine, turbo trade long and the turbo trade short, and of course there is sufficient time for questions and answers. And first, a disclaimer as well. We from OptieAcademy, we are aiming to help investors and traders to be successful, both novice and experienced. Is our mission, and we are sharing our insights for educational purposes only. And we are not responsible for any loss you might have or occur. And further details and prospectus of the products of Vontobel, you can go to certificates.vontobel.com. And now we are going to start with a nice story about OptieAcademy, OptieAcademy. How did we start actually? Harry and I started back in 2011, so 10 years ago. We started to help investors and private investors or business to business as well, and to educate people how to earn money with options, because it's very difficult, of course. First, you have to have a very straight view of the market, and also how to play the market, whether it be stocks or shares or options or turbos. And we want to help support novice and experienced traders and investors. We are doing that by coaching sessions, seminars, and webinars. We issued several ebooks. We have also trading insights. And one of our favorites is also the trading weeks every year, if you are not restricted by COVID-19, of course. In the past, we went to Istanbul first time, Alicante as well, Lisbon, and back in 2019, we've been to Cyprus. A very grateful week we had with between 10 and 18 traders all the time, and it was very great. And today I would like to share my insights for tonight, and that is Prosus. Prosus is a global consumer internet group, and it is one of the largest tech investors in the world. And Nesper's stake in Prosus is 72.5%. And Prosus has different and several investments, like in Tencent, the trading app Bucks as well, a Trip, like trip.com, and Udemy, so just to name a few. And the nice thing is that Prosus is tradable on the Amsterdam Stock Exchange. You can buy the stock. I don't know what the price is exactly now, around 83 or something, I think. Maybe Harry knows best because he's the European desk, I have to say. Yeah, it went a little bit down. And actually, I bought myself the turbos as well of um, of Prosus, and that is actually tradable on Maxim as well with by filling out the how do you say, the ISIN code. I will put it later when Harry will speak. And this is a daily chart of Prosus. I'm very visual. I'm a chartist, and the daily chart of Prosus, you can see it dropped from 112 towards 80, and there's a very huge drop, of course. But as you can see, this year it fell back from 80. It went through the roof to 112 and fell back around 80 again. So, in my opinion, this is very nice, solid support area, give or take 80. It's a round number. So if I bought this um, the turbo because in my opinion, um, Prosus has a sufficient room towards 92 or maybe 100. That would be great, of course. And I did it with by taking a bullish view on Prosus, and it did with the best turbo long and the ISIN code you can see here with DE, the many characters. I will type in later for you in the chat. And the leverage ratio actually is 5. If I'm right, then if, for instance, the Prosus stock will rise, increase in 10%, then the gain of the turbo will be 50%. If I'm right, also vice versa, of course. And the ratio is 0.1. And Julian, maybe you can correct me if I'm wrong, of course. And the ratio 0.1, that means that you need 10 turbos for replicate one stock. Is it true, Julian?
Yes, exactly. It's in this way. This means that one turbo is on 0.1 share of Prosus. So if you buy 10
Yes.
turbos, you're going to be on one share of Prosus.
And why did you do this ratio actually?
Well, it's what I said with the example of Amazon here. The let's say the stock price is not that high, so maybe we could have made it with one, but then the price of one turbo would have been 16 euros 0.8. So if you have a low ratio with a price of one, it allows retail investor to sell some part of the products to keep the rest. So it's a little bit better for investors to have a lower ratio, to have a lower product price, than to have a higher ratio and also higher product price. Because with the example of Amazon, you have Amazon quoting at 3,600. If you have a strike at 3,000, then you're going to have a product costing 600, and then it's going to be very expensive. So that's why we're going to have a lower ratio, so lower product price, but it's not affecting the return of the product. The return, it's only affected by the leverage of the product when you buy it.
True. What I like, of course, I'm a risk taker. Otherwise, because when you don't take risk, you cannot earn. You can ask Max Verstappen as well. You have to take risk, otherwise you will not reach the finish. And the thing is that what I'm always aiming for, a certain portion of investment between 100 and 200 euros, for instance. That is for me personally, that is okay because I have many positions simultaneously. So instead of betting 1,000 euros on one product, I'd rather take 5 products for 200 euros, for instance. So if you buy this this product, now the bid ask is 1.68, 69 is ask price. So 469 euro, you are able to buy this this product for 100 lots, and that means that you're in the game with this amount. And when everything is going wrong, okay, the only thing what I lose is 169 euros. And I consider that as a cash lot. It's a kind of lottery ticket. Of course, a lottery ticket, but with educated guest. Because I did my due diligence. Of course, I don't have a crystal ball. Maybe Harry or Leroy has a crystal ball. I don't have it. And so this is my take. And this is a chart of PRX, Prosus, best long versus Prosus stock himself. And you see the product, the best is moving around up and down. And as you can see on the left-hand side, you see on the Y scale from 1 to 5, that is the price of the best turbo. And yeah, if you bought it for 1 and you could sell it for 4, then you would have an increase of the return of 300%. It's a decent gain. And as you can see that from the low, there was mid 70s, I think 70 euros more or less, towards 110 more or less. There was an increase of Prosus, and you can see that green line is that. I'm a little bit blind of colors, I think, but I think it's a green line. And so this might take, who likes this kind of trade? So to put a small portion of your portfolio, just to put a small portion, if you're right, you are able to gain quite well. And if it's not going well, then yeah, you only risk the only risk you have, you lose your investment. And Ruth says yes. Okay, thank you. Hans needs more information. Okay, that's also good, of course. Do your own research. And I know if Harry is also his microphone on at this moment. Yeah, Harry is in the house. Okay. So Harry, thank you very much for joining us, and the floor is yours.
Okay, thank you, Jan Robert. Yeah, I must say it is, of course, always a challenge to find the right stocks and now find the right turbo with it. But yeah, that last is the most easy because as already been told, is that yeah, you can be only do well or do bad. It just depends, is the stock increasing or decreasing? And yeah, there's no time element like with options. So I must say I like Prosus as well, and I've a small long position in it. And as Robert already said, you can have different positions next to each other. And me is being asked to put also a short position, and I came to Tesla. I must say it's a nice car. My neighbor has one, I must say. So it makes me a bit jealous, but not too much, because yeah, I heard last week in the news that yeah, not every customer is satisfied anymore. And so yeah, the noises about dissatisfied customers is gathering, and yeah, some models are too fault prone and also expensive to repair. And yeah, of course, there can be battery problems, or in some models also, the 3 and the Y, they need a software update. So yeah, they said in China 30,000 Teslas are being recalled. So that's quite a number, because we think always that Tesla sells really a lot of cars, but of course worldwide it is. But when you compare it to other cars, it's still, yeah, let me say, challenging. And so there are also dropouts or malfunctioning. So you don't expect such thing to happen. And yeah, when you look, the next page will be about stock price. That current, when I made this was yesterday, it was 681. I just looked 1 hour ago. It dropped a bit, but only a few bucks. So, but yeah, it has a book value of $24 per share. So this is really incredible when you look at it, and especially when you compare it to, let's say, the German stocks. Yeah, I'm myself driving the BMW, and I must say, yeah, they're also nice cars, but they're also priced nice, and it doesn't have PE ratio of 685. So it means Tesla already is like thinking that they can sell 10 times more cars like they do today. So let's look at the next slide. Then we can talk about also the technical analysis. When you look at it, it was last year, maybe some people remember, it was like the old stock because they had a split, and that was, I think, last November or something. And then it jumped a lot up because everyone said, that will be nice. Tesla will be cheaper, so more people can buy it. And maybe they haven't heard then from Vontobel. So that is not good knowledge, we shall say. But now Tesla moved actually a bit down this year, as you can see on the chart. That it's now around 675. So this was of yesterday, it was 681. But the high was a couple of months ago, and then it dropped severe towards 500. And from there it moved up till, it is a bit now the high of the last few months. And so I think this, you see also some resistance, let's say around 680, 690. So you must not look at I think $10 in this stock. We have seen that if it drops, it can drop fast 100 points. So that is also what I have in mind, that we can go, let's say, from 680 till 580, and then take some profits and let the other part remain, and even a bit, can be a bit more down. But this stock shows one way. If you put it with options, like we used to do in the past, you pay a lot of premium. And that's why for this stock, I think this Vontobel turbos is far better solution, because you can, without premium, you can go short, and you don't have to be afraid also about movement up severe, like maybe people know what happened a couple of months ago with GameStop. I don't think this will happen with Tesla, because Tesla is already, I think a couple of months ago, it was equal worth as 10 other car companies. And the whole car companies from Europe were cheaper than one stock of Tesla, you can say. So I think now Volkswagen made a move up, even the French stocks, Renault made a move up, BMW, as I said already. So it came a bit closer, and don't forget also Toyota, who was always the biggest car company. And when you look also at the number of factories, Toyota is a really big company. But that is how I like to combine the current state. Tesla is a really expensive stock based on fundamental things, and you see also the technical side shows like there is some resistance around this level, give or take 10 points. And but if it moves a bit down, then more people will jump on the bearish side. And so this can be good timing to put things on. Jan Robert already put the icing code in. And from Prosus, and you can see now also the bearish one that I put in. And yeah, there is distance to the knockout level of 32%. So it means, yeah, give or take 200 points up. So you don't have to be afraid of right away to be stopped out. And yeah, of course, we look also at the spread. The spread here, you see, it's just 400ths of a point. So that is really nice, I must say. And yeah, therefore, you just you can buy small, but you can buy also bigger as long as it is regarding the rest of your portfolio. And I think yeah, it's a good way. Just put a long position, for example, in Prosus, and put a short position with Tesla, and you can, I think, you can wait what will happen the next month. So yeah, we like to see what will happen this month. As you know, the second of the half year just start today, and we had a really volatile day in Europe, and I haven't seen much about America, but Europe, it was in Holland first up 1%, then it went down 1.5%, and it closed more or less around yesterday. But yeah, we are at the high of the year, and I would like to have at least also some shorts, so I can say think also about Tesla, and I hope we can see you all next month, and then we can discuss a lot of other things. There are more turbos with Vontobel, and yeah, I would say if there are any questions, please let us know, ask them. We have still enough time for some questions. I don't know if Jan Robert already saw something in the chat.
Not yet.
Not yet. Okay, that can mean that or everyone fell asleep or everyone understood that we had a clear presentation. So maybe also Julian has to add something to this presentation.
Yes, I mean, if any person is interested in getting the presentation, I think OptieAcademy is going to send it to you, or you can also contact Vontobel directly, and we can send it also to you. One last thing about products like turbos in general, or exchange traded products, it's really important to understand the product you're investing in. And really, if you have any question about how the product is working, it's always a good idea to call the issuer or to write an email to the issuer and to ask a question about the product. And then we can explain it to you.
Okay. I don't know if there's an echo now because of the microphone. Yeah? Because maybe of the microphone. Valerie? Yeah, I think it's better now. So what we did is above you can see to receive the turbo trade of the week starting tomorrow. Our first insight, long or short, there will be a surprise, a cliffhanger. And also I put the link of Vontobel website themselves. So if you have any question, maybe Julia, if you have an email, you can type it in also. And thank you, Christopher, of course, for your attendance and also others. And I hope that you had some insights. I know what Harry had. He said he took some shorts. I will also have some shorts, but then for holiday. Within 1.5 week, I'm going on holiday, and back in I think about after 4 or 5 weeks, and back in when I will be back in August. we will plan another webinar in August again, and we will keep you updated. Actually, this webinar has been recorded, so the recording will be rendered, and also you will receive this by email later on. And Ruud says GM56V works also at Maxim. That's very nice. And Adri says test is touching resistance line, I think. Yeah, that could be possible. I have a chart here, and that is around 700. There is a nice resistance area, and I don't know if there is some possibilities. No, not yet. I think I have to select a screen like this. Screen, full screen. That's good. Screen 2. If it's right, you can see now a chart. If it's right. Not yet. I hope so. Yeah, it's coming. So I have here. I'm always taking a look at the multiple time frame, and that means that that on the left top side is a weekly chart. The right top side is daily, and as you can see, what Adri told, there is on the daily chart a down triangle. Yeah, there's a gap up since last week, this week, but it's hovering and having resistance area around 700. Always, I'm very keen, or I'm very reluctant, and also very keen on round numbers. As you can see, 700 is a round number, 2 zeros, and the next round number to the downside is 600. So it's 100 points difference. It would be great if the market will drop. My take would be 600, and I don't know which stop loss level it was of Harry. Yeah, 200 points more or less, between 800 and 900. So we have more than 30% error risk. So that is also my advice, recommendation. Don't use products which are too tight to the stop loss. And Ruud says 890. Thank you. And so I agree with Harry. If I would like to play Tesla, I would like to do that to the downsides. And so at this moment, I don't know if there are any questions so far. And of course, I would like to thank you very much for your attendance. And of course, Julia, thank you very much for your presentation. And once again, also Harry, also a good presenter. And I hope that it was very clear. We'll come back to you later in August. We keep you posted. So if you want to be informed coming periods, subscribe to the Turbo Trade of the Week, and you will get it fresh from the press from us soon. Thank you very much, of course. And Julian, maybe you have some final remarks.
Well, it was a pleasure for me to do this webinar with you. Thanks a lot for organizing it, and we'll meet again next month in August for another webinar.
Okay, thanks very much. And everyone, whenever you're going on holiday, have a safe and healthy holiday. Have much pleasure, and very good luck with trading and also turbo trading with Vontobel products. Bye-bye.
Bye.